Good morning, everybody, and welcome to Option Pit. I'm Andrew Giovinazzi, Chief Operating Officer of OptionPit.com on what we'll just call Rally Thursday. Rally Thursday. A little blog last night about, relative volatility, that we talked about in the Option Pit chat room a little bit. I said a key thing yesterday, don't be short the realized vol. And what we've got is, when the market's under strain, doing all kinds of crazy things, can't figure out what it is, right? Look at the move, right? That's a 70 handle move from the lows. Okay, that's huge. Almost any short-term straddle would pay, even though it was trading 20 vol. Why? Because the realized vol is higher. So we covered that yesterday in our chat room. We'll probably discuss it a little bit more today, although I think the realized vol trade has passed us to some degree. The vol will start coming in and everything will kind of sort of creep around for a little bit, sort of bouncing around. But at this point, you're staying, look at this, you're staying out of the way of the market. I'm looking at a target, they said this morning in the Pro Chat, of 16 for VIX, and we're about a half a point away. What you will see happen, though, are all the vol products, their decline is going to slow down considerably. Why? Because now, as the market repairs itself, all the VIX futures will go into contango. So you have now, yesterday we're pretty backward. VIX cash is now dropping below all the futures. Everything's kind of lining up and is sort of setting into the Santa Claus rally once again on cue. So what would I do? I would be careful of the upside. I mean, like broken wing flies on the upside, even today probably would be a good day for that type of trade. You still have, again, a 16 VIX. No reason it can't go to 14 if you have another week of nothing going on. Oil prices have stabilized for the most part. They're just not going down anymore, which is really what I think the market was sort of looking for, which at least for now they've got. Right? So we basically, yesterday was the classic day of you don't sell realized vol. You can be short vol at Vega type vol, but you don't want to be short gamma or you get your face ripped off. All right. So if you're in our chat room, you probably saw some ideas that would have worked okay for that. What do I expect? I expect VIX to be 16 by Friday, barring some other major announcement from somebody. I would not be surprised if we continue to rally. Real simple. And I think that's what we got. I think if you want to sell some vol, you even still have some relatively high volatility. If we go to a name like RIG, it's still pretty high. Maybe start looking at broken wing butterflies, things like that in this in this industry, where you're basically, if you could set it up like maybe a Feb cycle with your long strike at the lows, I still think you have a good volatility opportunity in a lot of these things, right? Because from an implied vol point of view, let's take a look at, I don't know if Epsilon Mobile is going to be our best choice to sell vol. Something like Noble Energy. All of these are kind of have the parabolic bounce, but vol is still sky high in all of these. Oh, I think I just got to fill. Hold on. I believe so. I did. All right. So anyway, that's where we are. All right. Expect, the pace now of movement should slow down a lot. And that's what will kill vol. But the opportunity is still here, okay, in these products. I think so anyway. But again, I think you still want kind of a controlled short vol position. Because just because oil's not doing anything for the last couple days doesn't mean it will continue. Okay? By the way, for me, that was me just selling some calls that I had bought a couple days ago. So things are just unwinding. Other than that, you guys have a good day. I'll see you in the chat. We're going to look at, I think we should look at some more of the oil patch, right? I still like the short name, short oil position. I still think there might be some opportunities, volatility, and I still think there's some opportunities in, let's say, the treasuries. All of this, these panic products are still at really high levels, don't forget. I mean, if you look at the treasuries, right, you honestly think we're up here because the rates are so low? Why can't we get to 120 on the TLT if there's no emerging market collapse, right? Right, because this is all panic. Right, so we'll look at some structures with this. All right, everybody, you have a good day. I need somebody to take control of the room while I process this video. Anybody? Steve A., thank you, sir. I will be back in a few minutes. And I'll be back in at 10:15, so just look for me. I'll come in as Andrew. All right, guys, bye-bye.